Right. I will at this point welcome Charity, talk about fraud management, and online we also have Mercy. So welcome, take it away.
Okay. Good afternoon, everyone. I hope you're doing well. My name is Charity Elkins, and I am from Crosslake Technologies. And I am going to be presenting fraud management business scenarios along with my partner in crime, Mercy Buku. And so we're going to just go over brief introductions, talk about the project process, progress to date, our approach or scope and approach, and our next deliverables. And then we'll be honored with Mercy taking us through a presentation, mitigations from a provider perspective. So by way of introduction, I've got over 25 years in software development and program and project management experience leading various projects, various sites, specializing in software development. And Mercy, my role in this particular project is program planning, specializing in pandemic, work stream planning, program facilitator, and making sure everything's documented and all the stakeholders are being kept apprised. Mercy, she is a certified. Mercy is a certified anti-money laundering specialist and an advocate of the High Court of Kenya, Commissioner for Oaths and Notary Public, and admitted to the Kenyan bar in 1989. She has extensive experience as a trainer and consultant in compliance and anti-money laundering and countering the financing of terrorism in the digital financial services and banking sector. She's authored multiple policy briefs on women's financial inclusion, digital financial inclusion, financial literacy, as well as DFS, risk-based supervision. So our project goals and objectives were that we were to bring together recommended partners to develop a cohesive business requirements for best-in-class fraud management, to develop primary and secondary fraud use cases. We wanted to create a collaborative view to reduce real-time payment fraud, and then as a deliverable, make that available as a public good. Our scope was sub-Saharan geographies for e-money providers, local and regional banks, and then high-level use cases for transaction fraud, third-party fraud, and social engineering fraud. We have a number of partnerships we were lucky enough to establish. We created a working group members that include real-time schemes, banks, e-money issuers, and fraud software providers. We are lucky to be able to partner with BankServe of Africa, Jopak, who is present at this conference, Montron, Cybran, Greg is on the line, and industry experts such as Mercy. We've taken a project management approach to this effort, created a core team, individual work streams, which I'll go over what those work streams are in a moment. We've got a governance team that provides oversight, and as I mentioned, industry expertise such as Mercy that helps bring real world examples and considerations to the work that we're doing. We've got work streams where we have check-ins at various cadences depending on where we are in the project lifecycle, and our work streams report out to the greater team at a regular cadence. Right now, we're at a monthly cadence, and we hope to have our business requirements complete by the end of June of this year. So the process we took is we developed high-level business requirements with the senior leadership that was involved at the initiation of our project. And then at that point, we create a high-level personas. Our membership established within their own respective organizations, individuals that would populate work streams, and we defined lower-level personas and created a prioritized list of use cases that we wanted to address. The next step from there was that we created detailed journey maps and determined what the gaps and laps were across the work streams, and determined and defined dependencies at that point. And the step that we're on right now, as I mentioned, are the business requirements. And we started that process of business requirements, I'd say February of this year, and we've made pretty good progress so far. We're developing those business requirements individually as individual work streams. And then once we near the completion of those business requirements, we will merge those business requirements to identify duplicates and dependencies. The business requirements, we want to make them smart, specific, measurable, actionable, and then we'll go from there. So here's an example of some of the personas that we created. For each of the personas, we want to make sure that what our requirements are actually addressing real world needs. And so we created responsibilities for those personas, use cases in layman terms, what their personality were, what their inputs and outputs would be, and any sort of parking lot items. And then we created journey maps from those, where we have persona swim lanes, what those processes were, key dependencies across work streams and the like. And then the phase that we are on right now are those, as I mentioned, the business requirements. And the business requirements are mapped, each of the individual journey maps. And each of those business requirements are going to have like the descriptions, operations, error handling, user needs, acceptance criteria, and a testing approach. And the goal is that these business requirements can get folded into a product management backlog so that they can be actioned. Since we were working in a pandemic, we became experts at using collaboration tools such as Miro. I don't know if any of you have used it. It's got a pretty steep learning curve. It's a really excellent tool, but it takes a little bit to get used to. So I can highly recommend it. One of the nice things about it, it enables remote learning. And it basically is, if you're in a conference room and if you were going to put sticky notes up on the wall, it allows you to do it in an online environment. And you can work synchronously or asynchronously. And it's one of the nice things is it's an infinite whiteboard. And so it worked out quite nicely. And then we also use Zoom so that we could break out into smaller teams as needed. So where do we stand today? Well, we established 5 work streams. We have 4 teams. One team has 2 work streams: financial crime, hub operator, end user, central banks, and DFSP banks. I mentioned before, we developed personas, journey maps. And so each of the work streams, we've completed the journey maps and the persona cards. We've got about 20 personas that we developed across these 5 work streams. And where we stand today by team, for example, the financial crime team is about 80% done with their business requirements, 40% for hub operator, 45% for central bank, and DFSSP is 20%. The reason the end user says 0 is because we have one team that's doing 2 work streams. And so when the first work stream is complete, we're nearing completion, they'll finish and pick up the end user one. Each of the teams, it can be challenging to translate requirements into something that's actionable by a technical team. And so each of the teams identified a business analyst within the team that is going to help and has that expertise to help us make that translation. And I have to say that I feel really fortunate to work with the teams that I do. I mean, they've been really great to work with, very engaged, very passionate about the work that we're doing. So as far as next steps, we're going to continue on and continue to finish our business requirements. We're hoping to have a face-to-face meeting in that timeframe. So that as we bring all these business requirements together, so hopefully by the end of Q2. And we will be reporting out to that governance team so that they can provide additional insights or considerations that we may not have thought of. So next up is, as I mentioned, my partner in crime, Mercy, and she's going to walk us through her presentation. Mercy, are you there?
Yes, I'm very much here.
Hi, Mercy.
Hi, everyone. Let me just start sharing my screen. Oh, I need the other, yeah, okay, great. This one. Do a slideshow. Just moving into slideshow. I hope everybody can see the screen.
Not yet, 1 second.
Can you see it now?
Okay.
Hello?
Yes, we can. Go ahead, Mercy.
Great. Once again, thank you, Charity, and thank you, the Moja Loop community for inviting me. This is the first time I'm having any interaction with Moja Loop, but as Charity has said, I have been involved in the DFS fraud management working group that she has been spearheading. And it has been a very great journey, getting all the insights that we have had from the various work streams. Possibly just a little more about my background. I've been a banking lawyer for several years. As you saw, I was admitted to the bar in 1989. So I was a banking compliance lawyer for most of my career. In the last 5 years before I went into full-time consultancy in 2015, I was working for Safaricom as the head of the money laundering, anti-money laundering department, in charge of the M-Pesa anti-money laundering initiative. So I will take you through digital financial services fraud mitigation strategies. My primary focus will be on mobile financial services. And as you're aware, there's a whole plethora of digital financial services which are offered on mobile payment platforms. So we'll be talking a little about that. I want to start with this quote from one of the policy briefs I've done. This one was for CGAP on DFS fraud in mobile financial services, where we observed that the mobile money continues to evolve in various markets driven by competition and consumer demand. We have increasingly sophisticated DFS products, and these new services have great potential for financial inclusion. Unfortunately, as they have evolved, so has fraud. So what I'm saying in essence is that any system or any initiative which aims to drive financial inclusion through digital financial services, etc., must also then think about initiatives around balancing financial inclusion with financial integrity, risk management. So what are the vulnerabilities for DFS? And apologies, mine will be a very academic discussion with a lot of words in the slides. I think I have a little bit of time, but I'll finish within the time given because you're going to get this, this presentation. So there are 4 major categories of DFS. We have payments, where we have our electronic money, MFS, crypto, remittance services. There's also asset management. We have the internet banking there, crypto asset trading, etc. Alternative finance, peer-to-peer lending, online balance sheet lending, etc. And then others such as internet-based insurance services, healthcare, etc. And we have various consumer risks attached to these products. They are diverse, not as easy to detect as traditional financial product risks. And they mainly comprise online fraud and cybersecurity risks. For example, phishing, we have farming, spyware, the SIM card swaps. We are very familiar with those here in Africa, profiling, and even hacking. So all these, to a lesser or greater extent, we have all experienced them, or we have heard about them. And so we need to ensure that we have mitigatory strategies in place to address them. So when we look at mobile financial services, what is their vulnerability? I always laugh because I'm from a community in Kenya where words like vulnerability are not easy to pronounce, but I think I've got it now. So when we look at the growth of DFS, and especially mobile money in sub-Saharan Africa and Southern Asia, this has mainly been because of that it is at the center of financial inclusion initiatives. Mainly because of lack of access to traditional financial services in these regions, the prevalence of mobile phones, wide acceptance of MMT. It is a cashless service. Of course, its speed and its anonymity and also its portability these are factors that make it very attractive to criminals. And then, of course, there are all these services that have proliferated from a mere P2P. We have all manner of services being offered on mobile banking and other digital platforms. And we have seen these vulnerabilities increasing during the COVID era due to the measures which were put in place by regulators and even providers to encourage increased cashless payments, which this was seen as a means to prevent COVID. And of course, this also includes advances in fintech innovations and interoperability. It's interesting, I went to Moldova in 2017 to tell them about M-Pesa. I was invited by Financial Service Volunteer Corps. And, they had not heard about mobile payments at all. They did have phones and smartphones at that. And even debit cards were not in evidence. To get a debit card, you had to have an account. And we were told stories about teachers in remote areas having to bicycle for miles and miles to get to the nearest ATM. So one person would be sent with several cards with the pins written down on a piece of paper. This is where we were at several years ago, more than 20 years ago, really. Well, let me say around 20 years ago. So we still have areas which are not necessarily in Africa. This was in Eastern Europe, who are lacking in financial inclusion initiatives. So those are the deployments, 310 in 96 countries, 1.2 billion registered accounts transacting US dollars 2 billion daily. This actually was in 2020, not 2019. 51% in sub-Saharan Africa alone and 21% in Southern Eastern Asia. And so that is the digital financial services ecosystem, where we have all these services being offered on various platforms, digital platforms, money transfer, digital payment services, mobile banking, airtime management. This is what we started with, P2P and purchase of airtime. And all these institutions are part of that ecosystem, MFIs, the government. We've heard about SACCOs. In Kenya, we have a huge cooperative movement, and they're also very much at the forefront of offering services to their clients or to their members through digital platforms. Of course, NGOs are there, water and energy services, agriculture, all these are part of the ecosystem. And those are the providers, the telcos, the MNOs, mobile virtual network operators, we have banks who have been given telco licenses. And we have the banks and of course the other financial service institutions, cooperatives, Forex Bureau. All these are offering services either on mobile money platforms, or either directly or in partnership with a bank. They're offering BFS on internet, through cards, through their own apps, etc. So when we talk about, if we are going to talk about mobile financial services, we must also talk about the mobile networks themselves, because the mobile financial services are offered on mobile networks. And there are a whole range of frauds, or, let's say frauds, fraudulent attacks, which target the networks themselves. So when you receive that text on your phone telling you, nitumie kwa hii number, or send to this money, send to this number, send this money to this number. He wants you to use M-Pesa or whatever, Airtel money, but he's sending you that text on the mobile network. So it's important for us to also be cognizant of those risks. And the ITU, which is the International Telecommunications Union, has actually come up with a number of policy briefs on mitigatory measures which can be used to prevent fraud on signaling networks. The vulnerabilities, for example, hacking. Hackers can read your texts, they listen to your calls, they track your locations, they will gain access to your personal data. When we are talking about SIM swaps, this is actually a network fraud. They'll gain access to mobile banking and DFS apps, which are using the two-factor authentication, and they'll intercept these messages. So all these are vulnerabilities that can be exploited through either the signaling networks or the cellular air interface. And so for mobile financial services, there are three categories of fraud. We have the consumer affecting fraud, the agent fraud, and provider affecting fraud. I'll just run through them. We don't have time to go through each and every one of them in terms of looking at the typologies of how they are carried out. But these are all familiar to us, especially for those of us in Africa and even Asia who are using digital financial services and mobile financial services almost on a daily basis. I can tell you right now, I have no cash in my wallet, especially since COVID began. We pay for everything. I send somebody to the nearby supermarket. He calls me once he's finished his shopping, and then I just pay directly from where I'm seated. I pay to the supermarket's pay bill, and he comes with the stuff. So I've not actually done major shopping for 2 years. So we have identity theft, impersonation or account takeover fraud, the SIM swaps we've spoken about. Loss from erroneous transfers is still happening, where you send money to the wrong person and they refuse to send it back. We have a whole range of mobile banking frauds, and agents then on the ground also defrauding customers. The Ponzi schemes, we are seeing more of this happening. Social engineering, where we have the contracts, the promotional scams, the fraudulent texts, and even extortion texts. And then, of course, digital credit fraud. And then if you look at agent affecting frauds, we have customers actually frauds going and depositing fake currency. They also lose their float through impersonation scams, fraudsters calling them and pretending to be calling from the provider. Of course, customers also defraud agents. They also fall prey to scams promising them bonus commission. And then we have pay bill account fraud. For example, somebody will go to a petrol station, they'll pay for they'll take petrol and purport to pay for it via the buy good services till. And they will show the petrol attendant a fake message, maybe from a previous time when they visited the station. So that is the pay bill account fraud. And then providers are also susceptible. So when we are talking about systems our payment platform systems, we also need to consider that the provider is also susceptible to internal fraud, for example, from their employees, from their system integrators. You cannot rule that out. Banks are integrating with the telcos. Most of these frauds and customers lose massive amounts of money. And most of these frauds are actually committed through insider dealings or insider knowledge. Mobile banking frauds, digital credit fraud, and then of course you cannot rule out the use of mobile platforms for criminal activities such as money laundering and terrorist financing. And those are the emerging risks. As I said, we have so many new products and services. So we have digital savings accounts, we have digital insurance products, money remittance, debit cards, which can be stolen and the funds are transferred to bank accounts via the internet. Prepaid cards can also be funded with criminal proceeds via mobile money. Securities and investment products can be paid for by proceeds of crime through mobile money and through DFS channels. Digital currency are now the latest kid on the block, and these are universally transferable on interoperable payment platforms. And then we have the mobile network risks. Incidentally, for mobile networks, especially even for terrorist financing, we find that terrorists are no longer actually even using mobile financial services or digital financial services, which are easily tracked, but they'll call each other. They'll organize these crimes through the networks. And so the common signaling attacks on mobile networks include telephone spamming, spoofing numbers, location tracking, subscriber fraud, interception of calls and messages, infiltration attacks, routing attacks. You can read, I've appended the link there for the ITU report on these attacks. So you can read up on these in your own time. Two-factor authentication, this is to do with the mobile banking frauds. So as I finish, I want to now just talk about the recommended mitigatory measures. As I said, I was in charge of the money laundering reporting function in Safaricom, and we were never very popular with the business because the business wanted to roll out their products yesterday, and we would insist that we need to take them through a product risk assessment. And so it was an issue of balancing. Innovation needed to go hand in hand with financial integrity. So as I said, we were not very popular. So these are the regulatory and procedural controls for compliance and consumer protection. So really at the end of the day, when we're talking about fraud mitigation, we're actually looking to see how we can protect our consumers, because without our consumers, we would not be in business. So even as you innovate and come up with new products and new systems, how are you protecting your consumer? So KYC is there. Again, I will just run through them because of time. Training and awareness, not only of staff, but even of our consumers on how they can protect themselves, our third-party partners. Complaints recourse. Do your consumers have somewhere where they can call? And again, these are very useful sources of fraud data, because then you'll be able to know what the trends are. Product risk assessment, know your products, agent management, especially on compliance monitoring. What are your agents doing? Do you know how they are serving your customers? Are they defrauding your customers? Are they complying with procedures? And this goes hand in hand with compliance monitoring, both internally and even spot checks on agents and shops, and external compliance surveys. Again, blocking and freezing of suspect accounts, very important for investigation and enforcement. Reporting of these crimes or these frauds to the regulators. And then industry and stakeholder cooperation is very, very important, because that's where you get to benchmark against industry best practice. And this forum today is also a benchmarking forum where we are getting useful insights on what is going on out there in the industry. And then technical controls, I think this now is important for this forum because we are basically talking about systems and system integrations. So the systems we come up with on our platforms must be able to provide for real-time automated transaction monitoring, which would be pegged to transaction limits for financial transactions. They need to have a fraud monitoring capability, which applies artificial intelligence and even machine learning, and with prepackaged rule sets. So it should be valid, up to date, etc. Sanction screening, which is a must for AML and CFT. So we are not just talking about fraud. Are you able to detect whether terrorists are using your systems to carry out financial transactions? And again, the use of appropriate link analysis tools. So all these, I'm not a technical person, but I saw it happening. I had analysts under me, and I was always so impressed by the work and the reports that they were able to come up with. I remember we were able to solve, for example, when we had the Westgate incident and even our Garissa University incident, some of these tools were invaluable to the law enforcement agents. So it's very important to have them. Systemic controls, restriction of access rights, electronic biometric registration, PIN controls, blocking and freezing of accounts, system prompts to prevent SIM swaps and erroneous transfers. For example, when a customer is making a transfer, that transaction should not be completed until he has confirmed who he is sending, or who he or she is sending the money to. And of course, have a lead time for operationalizing SIM swaps and also mobile banking registrations. And those are the common suspicious activity indicators and red flags, and not only on mobile networks, but even on DFS networks. For example, a good system should be able to show you frequent deposits or frequent transfers, multiple customer and agent registrations, same-day deposits by the same person, people who are depositing to third-party accounts, customers who are failing registration validation. Again, I can answer questions around this, failing sanction screening checks, people who are carrying out multiple high value and high volume transactions with no apparent economic rationale. So these are the parameters that we plug into the systems. So if you are having, for example, your OSS, it should, when you're integrating it to the payment platforms, then you should be able to have these parameters in place to enable real-time monitoring so that action can be taken on the spot. Multiple attempts of failed transactions or password resets, immediate transfer of funds, frequent SIM swaps, frequent texts from blacklisted sites. For example, here in Kenya, most of our mobile money frauds come from the prisons. So those are blacklisted sites. Frequent agent transaction reversals. All these are indicators of suspicious activity. And so, for example, this is for M-Pesa. It is a check it is a preventative check or control for SIM swaps. So a new number is about to be registered under your ID number. Reply with yes to continue or no to stop registration. And this message is also available in Swahili. And that I think oh yes. And so this is from the ITU report in terms of the mitigatory strategies for detecting and mitigating signaling attacks. And again, they are more or less similar to what I've already taken you through. I won't really dwell on them. You can just read about these ones in your own time, and they are very technical. Again, from the ITU report. I attended this forum last year, and it was very interesting just listening to the tech, they call them the tech geeks, discussing these mitigatory controls. So with those few words, I'll just go to my key takeaways. So we are saying here that speed of delivery, the speed of delivery of electronic payments will give rise to non-traditional banking risks. And so regulators must ensure that providers have effective compliance programs in place. And it is also necessary to have the necessary legislation in place with appropriate regimes to enforce it, including appropriate training programs. So we've spoken about all these technical things, are we also considering that we need to train our regulators on them? Because otherwise, how are they going to police or monitor for compliance if they don't know what they're monitoring in the first place? Providers need to have the systems in place, and these systems should easily interface with payment platforms to enable real-time monitoring. And then supervisors and institutions must assess the risks and design measures to address these risks. And system interoperability is one of the issues or the key factors that you need to take into account when coming up with mitigatory measures. And these measures should then balance financial inclusion with financial integrity. And OSS developers then need to work with providers and regulators to ensure that the above risks are also being addressed in system integrations. And thank you very much. I just want to leave you with this message from a victim. So we need to play our part to ensure our consumers are not being scammed, are not being conned. Thank you very much. Asante sana. I can stop sharing.
Thank you so much, Mercy. Thank you. Are there any questions?
Yeah, Matt, will allow your question.
Sorry, thank you.
Mercy, one moment.
Yeah, okay. Let me mute my microphone.
So just quickly, given sort of a broad range of ways to be defrauded and controls and the like, it'd be really helpful just to get sort of a general sense of directionally how big is the problem now, how big is it, how quickly is it growing, or potentially shrinking if the controls are having good effect in a mature market like Kenya.
Mercy, did you hear the question?
Yes, I did. Should I answer each question? Are there other questions?
Just that one.
Okay. Let me say this because I'm no longer working. I'm no longer an employee of a telco, but just from the trends, what happens is that for a while we find probably there are no frauds that are being reported. Well, not no frauds, but the frauds are not as many as they were in for example 5 years ago. But then a new product comes in, and then you find there's a new fraud around that. The providers are doing their best, I think, in coming up with new mitigatory controls. As I mentioned, for example, the loss from erroneous transfers used to be very prevalent, where you send money to the wrong person and they don't send it back. At that point, they become a fraudster. But now with the functionality that most telcos have put in place now, whereby the transaction does not complete until you have seen the name pops up. And really, if the name pops up and you still send, you still press, send, and you send to the wrong person, then there's something, I think that's just an unfortunate mistake. And then, of course, providers have also put in place a very comprehensive hotlines, fraud hotlines, so people are able to get through to them. But you can't rule out these frauds happen on a daily basis. So today, I found a message from my phone, somebody telling me, please send this, that money, please send it to this number. What they try to do here is they want to catch you out when you're about to send money to somebody probably you don't know very well, like a supplier or somebody who's doing some work for you. And if you don't recheck that person's number and you assume that message came from the person you're about to pay, then you will send the money to that person. So yes, these frauds are there. And I think we saw an increase because of COVID and everybody using cashless payments. But again, the controls are there. The only thing I would say here is that providers need to do more in terms of sensitizing consumers. It needs to be a regular thing, not each time there is a major resurgence in fraud. It needs to be, I need to receive a message every week or every other day warning me about this fraud or the new fraud trends. So this is what providers need to do, even as they look at other new ways to provide technological preventive measures as well.
Thank you so much, Mercy, and thank you.
Thank you so much. We'll quickly go to the next session, business models with Mojaloop. That's setting up a scheme that matches all stakeholders' business models. Hard lessons from Myanmar. Makes you wonder if there are any easy lessons anywhere.